There's no standard definition of what makes up a boutique investment firm. And I suppose because of that, a lot of firms claim to either be a boutique or have that boutique culture. But when you look at the firms that are truly boutiques, then there are a lot of common characteristics that those firms share. I think you can break it down into three areas: the people, the culture of the firm, and the structure of the organisation. I think when you look at the people, you generally have people who are highly driven, entrepreneurial by nature. They also tend to be highly experienced individuals who are specialists in their particular area of operation. Culturally, it's very important that the people are very focused on delivering investment performance, tends to be very non-bureaucratic in nature, and very short decision lines. And then I think finally you come down to how the company is organised structurally. And it's really important that you create an alignment between the investors, the shareholders of the company itself, and the clients. And the only way to do that is to have true ownership of their own business. So you can have bonus structures and phantom options, etc. But I think it's only by giving true ownership of business that you create that true alignment and that desire to create a proper long-term business. Sanlam 4 was created in 2006 when four of us came together, calling ourselves Four Capital Partners, to create a business which was focused very much on delivering top-class investment performance, but also giving clients a very good service. Over the years, we've expanded the business, and we now have four direct equity offerings in UK equities, European equities, global equities, and more recently in US dividend fund. And we also have a multi-strategy business and a fund solutions business. All the teams operate completely independently of each other. And what we've tried to do is bring in highly experienced individuals, people who've generally worked in large firms elsewhere. They've been through a lot of investment cycles, and they can really back themselves by working within our structure. In 2008, Sanlam, who were a client of ours, took a shareholding in the business, and they gradually built that up to the extent that in 2014, as a larger shareholder in the business, we felt it was the right time to rebrand ourselves as Sanlam 4. Sanlam, creates a lot of opportunities for us. They're a very strong company based in South Africa with a very strong credit rating, and they provide that resources. And if we can marry that with the boutique culture of the teams, then I think we've got a very strong product offering for our clients. When clients come to invest with us, or boutiques in general, you are creating a special relationship. It's long-term in nature, working together to deliver the client objectives. The way we specifically can add value is that our fund managers all own a share of their business, and that means they're very committed to building a long-term franchise for themselves. And the only way they can do that is by truly meeting those clients' objectives over the medium to longer term. All of our fund managers also invest alongside the clients in their own funds, and again, that creates that complete alignment of interest with them. So I think by bringing those factors together, you build a long-term relationship where you've got fund managers who are highly incentivized and highly dedicated to delivering top-class client service and delivering clients the investment performance they desire. It offers investors access to highly committed and focused investors. We are there for the longer term. We're very committed to meeting clients' needs. We know that only by doing that can we truly create a business that will grow and be sustained in the longer term.